Imagine losing millions or even billions of dollars, not because of a bad investment, but because someone intentionally tricked you. In the 21st century, financial scams have become bigger, bolder, and more shocking than ever. From corporate executives hiding debts to Ponzi schemes that fooled entire nations, these scandals show how even the wealthiest and smartest people can fall victim. In this video, we're going to explore every major financial scam of the 21st century. You'll learn how these schemes worked, the people behind them, and the lessons we can all take to protect our money. Enron Scandal, 2001. Enron was once seen as the symbol of corporate success. This American energy giant promised innovation, growth, and huge profits. Investors trusted the company, thinking it was making billions. But behind the scenes, Enron executives were hiding enormous debts and inflating profits through complex accounting tricks. They used partnerships and off-balance sheet entities to make the company appear far more profitable than it really was. When the truth came out in 2001, Enron filed for bankruptcy, wiping out $74 billion in shareholder value. Thousands of employees lost their jobs and retirement savings. The Enron scandal forced the world to pay attention to corporate transparency. It also led to stricter accounting standards and made investors realize that financial statements could be manipulated. WorldCom fraud, 2002. Shortly after Enron, another giant collapsed, WorldCom. This telecommunications company inflated its earnings by nearly $4 billion, making it seem more profitable than it really was. CEO Bernard Ebbers and his team used false accounting to hide expenses, tricking investors and regulators alike. WorldCom filed for bankruptcy in 2002, the largest in U.S. history at that time. The scandal left thousands unemployed and cost investors billions. It also prompted significant reforms in corporate auditing and reinforced the importance of ethical leadership in businesses. Bernie Madoff Ponzi Scheme, 2008. Bernie Madoff's Ponzi scheme is one of the most infamous scams of all time. Madoff promised investors steady, high returns, claiming his strategy was unique and highly profitable. But in reality, he wasn't investing the money at all. Instead, he used money from new investors to pay returns to earlier investors, creating a fake sense of profitability. The scheme collapsed during the 2008 financial crisis, when investors tried to withdraw funds en masse. In total, Madoff defrauded investors of an estimated $65 billion. His arrest and 150-year prison sentence made headlines worldwide, highlighting how even wealthy and experienced investors can be deceived by clever fraudsters. Lehman Brothers collapse, 2008. Lehman Brothers, a central investment bank, didn't commit outright fraud, but its practices contributed to the global financial crisis. The bank hid over $50 billion in bad real estate loans using accounting tricks. When the housing bubble burst, Lehman couldn't cover its obligations and filed for bankruptcy. This collapse sent shockwaves through the global economy, causing massive losses for investors and triggering a financial panic. Lehman's downfall showed how risky financial practices and poor oversight can create global crises. Wirecard Scandal, 2020. The German payment company Wirecard gave the impression of being the next big thing in international financial technology. Investors were under the impression that the company owned billions of dollars worth of customer funds, but the 1.9 billion euros that were supposed to be in bank accounts did not exist. Following the discovery of the fraudulent activity, the company's CEO, Markus Braun, was taken into custody, and the company ultimately went out of business. This incident brought to light shortcomings in Germany's financial control system, illustrating that even the most sophisticated audits and regulations can occasionally fail to deliver the desired results. The incident came to light as a result of another incident. The event served as a significant wake-up call for authorities and investors worldwide. 1MDB Scandal, 2015 to 2020. 1MDB, or One Malaysia Development Berhad, was a Malaysian government development fund. Instead of being used for economic projects, billions of dollars were siphoned off by politicians and businessmen into personal accounts. The scandal involved banks, shell companies, luxury goods, and even Hollywood movies. Former Malaysian Prime Minister Najib Razak was implicated, and several arrests were made worldwide. This case showed how political power and global banking networks can be exploited for massive fraud. FTX collapse, Yuan 2022. The cryptocurrency exchange FTX promised to provide a safe environment for trading digital assets. Sam Bankman-Fried initiated the venture, and it swiftly attracted investments worth billions of dollars. However, through its sister company, Alameda Research, FTX used customer funds to engage in reckless wagering. Due to a rush of consumers withdrawing their money, FTX was unable to replenish its reserves and consequently filed for bankruptcy. This collapse resulted in billions of dollars in losses for investors and raised significant concerns about the regulation of Bitcoin and other cryptocurrencies. It brought to light the dangers of placing one's faith in unregulated platforms and the significance of openness in the realm of digital money. The 21st century has been full of shocking financial scams, from corporate fraud and Ponzi schemes to crypto collapses and international money laundering. The scale of these crimes shows that no one is completely safe from deception. By staying informed, learning from past mistakes, and practicing careful investing, we can protect ourselves and our money. Knowledge is the most powerful defense against fraud. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more insights into the world of finance. Stay smart, stay cautious, and never underestimate the power of financial education.